Y'all are familiar with Starbucks, right? All right, so let's look at Starbucks. First of all, would you say from the outset, Starbucks uses a high return, a high volume strategy or a product differentiation strategy? Product differentiation strategy, right? Now, admittedly, like they make the coffee pretty fast, but the idea of selling coffee for $4 or $5 for a cup of coffee, right? That's one where you're really focusing on return on sales, not turnover. What would be an example of a high turnover strategy, low price, high turnover strategy when it comes to coffee? Dunkin Donuts, you think? Dunkin Donuts is a little cheaper than Starbucks, and they kind of pre-make the coffee anyway. It's not like Starbucks, they'll make it for you. When you look at it, they usually have pictures of everything pre-made so they could do it real fast. And the prices are a little lower. Another example. Yeah, like maybe a coffee shop, or more likely, like I'm thinking of McDonald's. You know, like McDonald's breakfast, and they have a cup of coffee for $1.50 or something like that. You know, a small coffee for $1, and it's all made in the big things. You know, it's a little less premium, although supposedly McDonald's coffee is pretty good. I don't know, but the idea of McDonald's is to sell more coffee cheap, right? Whereas the idea of Starbucks is to make it a premium product that people are willing to pay extra for, and then you're willing to sell a little less. And you can see that in how the stores are run. Starbucks wants you to see that they're making the coffee in front of you, because that perceives to add value. McDonald's doesn't care, right? They just want you to have your coffee hot and fast. Okay, so here's Starbucks balance sheet. And what I'd like you to notice here is a lot of the different items. We have the inherent balance of the accounting equation here, which you don't want to forget about. That is, of course, that assets equals liabilities plus stockholders' equity. So we have assets on the left, and then we have liabilities and stockholders' equity on the right, and we show here that they're both equal. Let's go through the items individually quickly. We have what we call current and non-current assets and current and non-current liabilities. And it's explained down here what current assets are. Current assets are expected to be converted into cash quickly, whereas current liabilities are amounts that we have to pay quickly. And the amount of time is usually a year. So if something is expected to be converted into cash, used up within a year, it's a current asset. If it's not going to be used up within a year, then it's not a current asset. It's called a non-current asset or a long-term asset. So things like, let's look at what some of the current assets are here. Cash is current, obviously. Short-term investments, short-term, current. Accounts receivable is current because you expect it, usually accounts receivable is collected from 30 to 90 days. Inventory is current because you usually try to sell inventory in 30 to 90 days. And other current assets obviously is current. Now PP&E is not current. What is PP&E? Property, plant, and equipment. Buildings, land, equipment, vehicles, all this kind of stuff is long term because you don't buy a building for 3 months. You buy a building for 30 years for the foreseeable future. Goodwill, similarly, goodwill is not something that you create and destroy in 30, though some companies do that, but you try not to. Goodwill is something that you want to hold on to for a long time. So too long-term investments, obviously. Those are not current assets. Now let's talk about what these are for a second. We know that accounts receivable is money owed to you by your customers. Inventory are things that you plan to resell. Whereas PP&E, property, plant, and equipment, are things that you hold on to for a long time and you use them to make money. So something like a building, you don't just buy a building and then forget about it. You use the building in your business to make money. Liabilities. Accounts payable is Again, we have current and non-current liabilities. Current liabilities would be liabilities you have to pay within a year or less. So accounts payable is usually the biggest current liability. And that's money you owe your suppliers. So think about Starbucks for a second. Starbucks, how does Starbucks make money? Think even bigger picture than strategy. How does, in one sentence, how does Starbucks make money?
Low cost goods, high sale.
Yeah, they sell coffee. They buy it for $1 and sell it for a little more. You know, they sell coffee for more than they pay for it. Very simple. So then what does Starbucks inventory consist of?
Coffee beans.
Coffee. Most likely it's coffee and some, you know, like they sell other stuff in Starbucks. They sell like coffee mugs, food. You ever wonder, like, you know, the food that's like just sitting in the case there?
It tastes good.
I think it's fake.
Is it fake?
I think it's
No,
not.
that tastes actually good.
The food?
The taste just as good as the coffee.
Display.
No, but the food that's in the display, it always looks a little fake.
No, when you buy it, they just take it out from there.
No, but sometimes it's food that looks like it's been there a while.
Bacon, egg, and cheese.
But
Yeah, like bacon, egg, and cheese. Like you wouldn't want to see bacon, egg, and cheese that's been sitting there for 2 hours. It is what?
I'm guessing.
It's probably fake?
Usually when you look back, they'll take something out of a bag and just throw it in the microwave.
Yeah.
No, not the bread.
Yeah, it's really good quality food.
They
They
just
just-
coffee, not the food.
Yeah. So, but that's all inventory, right? All that kind of stuff. Like, let's say, you know what I bet like a lot of the little cakes and cookies and stuff. Well, not the packaged stuff, but like the things that's supposedly fresh. It's probably all frozen. You know, like bagels and stuff. It's probably all, they just receive it frozen and then they defrost. They take it out of the freezer the night before and serve it. Hmm?
It tastes pretty good. You should get it. You should try it.
Okay.
I mean, they are so much better than Dunkin Donuts. Like
All right, so I'm not going there right now, all right? We're just not going to go into Starbucks versus Dunkin' Donuts debate. You're in New Jersey here, and New Jersey is more like a Dunkin' Donuts. You're in Dunkin' Donuts territory, I kind of think, right?
Yeah.
Yeah. I don't know why, but Eli Manning advertises for Dunkin', not for Starbucks. So, I don't know. But anyway, that's what inventory would be, right? All that kind of stuff. Accounts receivable for Starbucks. Who's that? Who would owe Starbucks money? Starbucks doesn't sell to, can you go in there and say, oh, I'd like to open up an account and, you know, bill me at the end of the month? So who would owe Starbucks $385 million?
Like the grocery stores that sell the Starbucks
Yeah.
carryout cups.
That's exactly it. That Starbucks also sells to retailers. So they sell like K-Cups and they sell coffee, I think, too, through the supermarket, right? So all that would be accounts receivable, money that's owed to them by supermarkets and stuff. What would PP&E be for Starbucks?
for stores,
The stores, buildings, lands, what else?
trucks.
Trucks. All that machinery and equipment. That's expensive stuff, those coffee making machines. I think one of those machines costs $10,000 to $20,000 that the barista works on. $10,000 to $20,000. Goodwill really happens when they buy from other companies, so not going to worry about that. Accounts payable. Who is the accounts payable owed to? Who does Starbucks owe money? Who are Starbucks suppliers? Yeah, coffee bean growers. And anyone else?
Where they get their cups from.
Yeah, like supplies, right? The company buys like paper cups and they buy, you know, those $20 coffee mugs and stuff and all these other things. So whoever they get this stuff from, they usually buy it on credit, and the accounts payable is the amount of money that they owe for those things. Take a second right now and answer questions 1 and 2. How many accounts are listed as current assets? 5. What are they? Cash, short-term investments, accounts receivable, inventories, and other current assets. How about his PP&E? There's just one PP&E account here. Goodwill and intangibles, 1, other assets, 2, there's other current and other non-current. Other non-current assets they call. What's the total amount reported for current liabilities? 2075.8 million.
Property, plant, and the goodwill and intangibles. How many were there?
5 current assets, 1 PP&E, 1 goodwill and intangible, 1 other asset, 2 other assets. Sorry about that. There you are. And what amount is reported for non-current assets?
809.
Total stockholders' equity is
4,384.
There you go. Okay, so now's a good time